Okay, champs, welcome back to Libertas Trading and welcome to the event preview for ISM services on Wednesday, the 3rd of December 2025 at 3 o'clock UK time. So I've got mixed feelings on this one, really. On one hand, we've got the FOMC next week. We haven't had any data out of the BLS, so most of the major data prints haven't been coming through for the Fed. So, they're sort of running blind a little bit and they've got to make a big decision next week. We're not getting NFP until after the decision. We're not getting CPI until after the decision. So that means the headline, that means the employment figure and the prices paid figure. So the labour market figure and the new orders figure, the inflation figure for ISM services will be more heavily scrutinised than usual as the Fed try and get some sort of direction on where the economy's going, on where the labour market's going, on where inflation's going. They're going to be using these prints more heavily. So, on one hand, this could be really exciting stuff. We've got loads priced in for the Fed next year. I think we've got 22 basis points priced in for next week. And we've got a total of 86 basis points priced in for this week and also next year as well. Sorry, this year and next year as well. We've got 86 basis points priced in. So, we have got a lot of room to move on that. The only thing that puts me off of this is just last month's reaction. So let's quickly look at that a sec. So this is dollar yen from last month. If you look here, the headline print was quite solid. Business activity was really solid. Employment, could have been nicer, but it was still not too bad. New orders came in really high, and then the prices paid came in a bit higher as well than the previous. And look at the price reaction. We pushed up really higher for about a minute, and then just sort of meandered around all afternoon, really. So if we could quickly look at the 5-second chart to see the short-term reaction. You can see here massive spike higher in the first 5 seconds. We pulled down a little bit, which we tend to do with these sorts of prints, which is why it's always best waiting sort of 5-10 seconds before entering, especially on this data where you've got so much to digest. And yeah, you could have made a bit of money on this, but it would have been a bit of a disappointing print. So I'm a little bit more cautious on this one. Of course, last month we had the same scenario with the data blackout, this data being more heavily scrutinized, and it just didn't move markets much. So I would take a trade on these numbers or these numbers, but if anything doesn't come in line, I'd want to see higher headline, I'd want to see higher employment. So we're really focused on employment today. Of course, the headline's going to be really important, and then the prices paid is going to be important as well with the FOMC next week. But mainly focusing on the employment and the headline figure. And I really want to see some solid numbers across the board. And if any of these numbers don't come in, I'd want to see more on employment or more on their headline. So for the headline, for a dovish reaction, I'd be looking at 49.8 or lower, which would be below the minimum into contraction and the lowest print since June of 2024. And then for a hawkish reaction, I'd be looking at 54.1 or higher, which would be the highest since October of 2024. And of course, above the MAT's expectation. So we've only got market expectations for the headline. The rest I've just gone on the prior, but where the consensus and the previous were pretty similar, we don't have to go too far away from the prior on this one, in my opinion. So for prices paid, I'll be looking at 67.4 or lower, which would be the lowest since April. And then for a hawkish reaction, 72 or higher, which would be the highest since August of 2022. And then for the important employment figure, I'll be looking at 46 or lower, which would be the lowest since April of 2024, and should grab some headlines. And then for the hawkish reaction on employment figure, I'll be looking at anything above 50, which would put us into expansion for the first time since May, which could be quite nice. New orders, just 53.9 or lower for a dovish reaction. And then for a hawkish, I'd be looking at 58 or higher, which would be the highest since September of 2024. And then business activity, 51.9 or lower. And then for a hawkish reaction, 56 or higher. So for the expected reactions, for a dovish reaction, I'd expect dollar down, yields down. I'd expect gold up, but last month's reaction was not good. And then equities down, but again, not a great reaction from last month. So yeah, this was last month's print. And as you can see, just like major chop fest. You thought FX traded bad. Equities and gold traded even worse. So I'm sticking to FX today. So for medium-term plays, as I said, we've not had the best reactions from this data set in the past, so I'll be sticking to short-term plays, but could be a bit more focused on this one considering we have the FOMC next week, which we spoke about. So for a dovish print, you could look at some euro dollar upside, which upside could look nice. That's meant to say look nice. If we get a big enough miss as a pure growth differential play. We also have some yield differentials in the pair pointing to upside, and technically a break above that 1165 level could lead to some solid upside for the pair. So let's quickly look at the euro dollar on the charts. So we've broken above the daily move, 100 daily moving average, and we're just sort of around this resistance level up here where we've had a bit of a double top. So, you know, breaking out of here on a really bad print could look nice for some further upside. You know, maybe targeting 118 or something like that could be quite nice. And then for a hawkish print, so the dollar has been looking pretty vulnerable this week, and I'm not sure what sort of numbers we would need to see here to change that. But if you wanted to buy the dollar on a beat, you could look at dollar CAD for some upside. So the loonie is the weakest today on the session, bar the dollar, and we're at some massive channel support, which may support the pair. So quickly looking at the dollar CAD on the charts. So yeah, pretty nice chart here. We got some decent channel support or some channel support and resistance. And yeah, I wouldn't be surprised if we get a really nice print to see some support from this level here. Could be quite nice for some upside. We're also coming close to those 100 and 200 daily moving averages. So for scalping plays, as I said, I'll be sticking to FX on this one. So for dollar yen, I'll be looking at a 17 pip target. For the euro dollar, I'll be looking at a 12 pip target. And if I were to trade the equities, I'd trade SPX at a 7-point target. Of course, if we get a stagflationary print with everything printing red but prices paid higher, then we would expect stocks to fall. And if we get a Goldilocks print with everything printing green but prices paid coming in lower, then we can expect stocks to rise. So the reactions to ISM have been mixed in the past, so I'll be keeping risk a little tighter on this one, risking 50% of a normal position size. It's hard to know when to enter, but in general with ISMs, if the print is good enough, the market should move in the right direction. So if all the stars align, I'll be looking at entering within the first 5 to 10 seconds. It's well worth taking your time to digest all the data. There's a lot of it. So as we mentioned, just to go over it again, you know, we're mainly focused on these three numbers with an extra emphasis on the employment number. And, you know, with ISM, with both ISMs, as we spoke about in the manufacturing preview as well, you know, we really need to see everything coming green or everything coming red. Let's just say, like, you know, new orders comes in red, a little bit lower than prior, but these three come in massive, it's worth a trade. But in an ideal scenario, we want to see all red or all green on the board. So that's it for the preview. A nice short one today. Good luck, and any questions, please give me a shout.